together. And one of the things, hello, my name is Eric Golden. I'm one of the leaders of the Freedom Team. We're a group of 3,000 agents that have grouped together for a number of different purposes. And one of them is we all want more transactions. So every week on a Tuesday basis, we call it More Transaction Tuesday. We bring experts, icon, mega agents, someone that has a story that's worth telling, a lesson worth learning. Generally, Jeff Morrell is the host of this event, but he is at a conference in Tennessee, I believe. No, he's in Gatlinburg. Yes, Gatlinburg. And he asked me to step in for him today. I'm sorry he's not here. He does a wonderful job hosting this on a regular basis. And just so everyone's aware, this is not an exclusive one brokerage or another. Although a lot of us are within EXP, we want everyone to feel welcome, especially on this Tuesday More Transaction event. We believe that if we help agents be better agents, the industry moves ahead. And if the industry moves ahead, those that are good at it will flourish. Today's speaker, we won't necessarily be talking about lead generation the way we normally do or more transactions, but we will be talking about how to put more money in your pocket. For those of you that, or keep more money in your pocket, nonetheless. For those of you that want to be part of this every Tuesday event, I want you to know, just show up every Tuesday. We do have recorded all of the previous Tuesdays. The one we did last week was literally off the hook. It was as good as you'll ever hear on short sale conversations. It was so good last week, done by our newest leader of the group that we lead in the Freedom Team, that Stephanie has acknowledged that she will actually do a 4-part series in February. Don't hold me to this, but it may be on Wednesday mornings. But you'll get some messages. And if you're not within the EXP grouping and you want to know when that short sale training is going to be, please reach out to whomever connected you to these trainings, or myself or Kim, and we'll be more than happy to make sure that you know when that training actually occurs. There was something else I was going to say, and Kim, do you remember what it was? Don't think you did. Here's what it was. Anybody that wants to listen to any of the previous recordings, you can find them at freedomteamsupport.com. If you'll go down to the middle of the page, right in the middle, it'll be More Transactions. I'm not personally going to put that on you at the moment. Kim makes sure that Shaune has access for his screen. But I do want to encourage anyone that wants to look at any of the previous things we've done on Tuesdays, lots of different topics, go to freedomteamsupport.com and click on the big bubble in the middle called More Transactions. Well, with that said, we have hey, Courtney, how are you? Nice to see you. With that being said, I want to introduce our speaker today. What's interesting about this speaker is this doesn't happen all the time, but I personally was the one that connected with this speaker about 4.5 years ago. Funny story, I was rollerblading around a lake in Dallas and I came on a Sunday and I came across someone doing yoga. And so it was a good natural stopping point. I stopped, I started talking to the lady that was doing yoga, started talking real estate, found out that she was an agent and her son was a broker. And the gentleman, Shaune Corbett, I'm going to introduce, was that son. I got to know Shaune a little bit at that time. When I met him, he was doing about 15 to 17 million in volume. Over the next couple of years, through techniques that we learned, through the processes we're talking, he elevated that 17 million up to 30 million and up to 35 million. And so I want you to know that what he's about to talk about is emphatically the truth. It is something he has worked with. It's something he's used. He's going to be talking about tax strategies. So I will say, along with everyone else, I need you to hear this. He'll say it as well. He is not a tax expert. He's a realtor broker that has learned how to take advantage of the tax system properly and legally through the people that he's been guided to learn from. I want you to also know that we're not giving you tax advice. We're just bringing one agent to tell you what he does and what he's been teaching his brokerage for a number of years. Shaune does a boatload of real estate. So he's got volumes of income coming in and figured out ways to take advantage of it where he could utilize it and only give the government their proper portion. He's what's called an icon agent here at EXP. He's done it 4 years in a row, just eclipsed that again just a month or two ago. Another thing I always like saying about him is he speaks specifically. He's going to bang 40 minutes of content and it's going to feel like 4 hours. Your brain is going to go like this. So if you want to ask a question, generally I'd recommend you do that in the chat box. He will address those questions. He's going to keep an eye on that as he goes through. I am also going to say you want to check out his YouTube page. He's beginning to build that out with content. I think you'll find it very, very interesting. But check out the name of the way he spells his name. It's a little bit unique. So I want to make sure that you see that as well. And he has taken advantage of some of the EXP pieces and does have overrides from dozens and dozens of agents. So with that said, let me introduce my good friend from Texas, the Dallas area. You still in Flower Mound? You moved, I guess you're in Highland Village now, right, Shaune?
I live in Flower Mound, yeah, next to Highland Village. Very
cool. Well, how's the weather? You guys got sleet, right? Is that what happened last week?
Oh no, it's been bad. Yeah, we've got sleet and ice. I couldn't even make it to the office, so I'm actually in my home office, and it's totally iced out there, so I can't even drive. So I'm gonna do this from my laptop, which I think will be just fine. I think I'll manage. But it also means my kids are home, so there might be some screaming and some yelling. I apologize for that. I've got a 2, a 3, and a 8-year-old. They're all, separated. Stacy's a teacher, so she stayed home as well. So hopefully it won't get too chaotic.
Well, you've managed that well. Again, you've been doing it for a number of years. Generally in these situations, I just turn it over to you because you know what you're talking about. Again, I've been around you for 4 years and you've been doing this training for your brokerage, and I've participated listening to some of this. So I'm very impressed with what you've shared in the brief moments that I've been able to listen, but I'm really excited about getting a full dose of it today. And again, I want to remind everybody, it is recorded. I highly recommend that you come back and re-listen. Shaune, go ahead and take it away.
All right. Thank you, Eric. I love it. Thanks for having me on. There was a number of topics we could have talked about. I threw out some ideas. This is one that I do every year. I've got agents. I've got about 30 agents, and most of them don't have any type of training on taxes. I'm going to kind of cover some basic reasons why people don't even talk about it or really deal with it. And as far as I know, most brokerages don't have any specific practice of teaching their agents how to account for deductions and when to move maybe from a sole proprietorship to a LLC. These are some things you'll hear about. And I think there's going to be some value here. I know you guys hear this at the beginning of every meeting. It's always helpful for a speaker. If you guys have the ability to turn your cameras on, please do. There's not going to be as much interaction. I'm going to try to engage as much as I can. I'm going to try to make it as fun as I can, but it's really going to be specifically targeted to help you guys in minimizing your taxable liability. And we're going to talk about maybe there's a point, maybe don't minimize everything. We'll talk about some reasons to that because you guys work with clients that do, and you can't get them qualified for loans. So real quick about me. I have been in Dallas-Fort Worth generally my whole life, probably about mid-'80s. Went to Highland Village Elementary. I now live in Flower Mound, which is the town right next door. Pretty local here. I graduated college. I went for a corporate job. I was vice president of human resources for about 10 years. The company was selling houses. So I made them an offer. I said, hey, if you can pay for my license and my broker license, I'll sell your houses for free. And these houses were $1 million homes. And they said, we'll take you up on it. So that's actually how I kind of got into real estate. I feel like a lot of people don't drop everything and get into real estate, which is really important for us to talk about taxes as well, right? So you guys would have corporate jobs. You're doing other things. I'm selling a few houses on the side. I make an extra $15,000, $20,000. And the only thing you know to do is add it to your 1099 income, and then you're paying max taxes on it. So I'm going to be talking to some of you, and then those of you that are wanting a little bit more advanced ways of dealing with it. And then I'm going to give you some check things to be thinking through on the deductions. So one thing I want to do, I do want to try to create this, make it fun, right? So talking about taxes is probably not at the top of everyone's list about growing their business and things like that, but it's a necessary evil. So first thing I want to do is share my screen. And I always love when the Zoom bar gets right in the way. That's it. You guys are filling up the room. There it is. All right. Let me open my little presentation here. Any questions or initial thoughts? I've got some people posting some things. All right. Well, let's jump right into it. I always like to start with a little bit of humor, a little bit of training for kids, teach them how taxes work. I don't know if y'all can read it. My daughter asked me what taxes are like, so she could understand. I went to the kitchen and ate 46% of her cookies. And then, of course, she's crying. So that's the way it kind of feels sometimes. I think we all start there, especially if you're just collecting the checks from commission checks, taking the full amount, applying it to your income. You're going to be feeling some real pain on taxes, right? Most people don't talk about it. It's what I was talking about earlier. I think that a lot of people don't properly account or really plan for them. You know, I moved from hiring a CPA to a tax planner about 3 years ago, and they really took well beyond deductions strategies for absolutely minimizing your taxable liability when you have good income. You know, if you're only making enough to kind of make the business work, it's not quite as critical. But, you know, I feel like somewhere around 300,000 or so in income, you should be looking at making a transformation from a sole proprietor to some type of LLC and then running a payroll. I'm not going to get into those specifics, but those are things I want you to be thinking about. This is high level. We're going to be doing common things that real estate agents, and really, this isn't just real estate agents. I want to kind of emphasize that as well. It's business owners, right? I'm talking about tax strategies for business owners, really, to minimize their taxable income and liability. Eric mentioned earlier, I'm not a CPA, I'm not a bookkeeper, and I don't play one on TV. I might be able to, but I don't get paid to do that, and I don't know it that well. I just know what I need to know and what I need to share with everyone else to help them. I do this every year about this time, so I'm going to take this information and share it with my group right after this meeting. I have meetings on Tuesdays at 11 o'clock every Tuesday, so I'm going to be sharing the same information. And it's really directed mostly at the traditional 1099 and sole proprietor, but the benefits that you'll get from this is that we're really going to be talking about deductions and things you may be missing. Okay, so there's going to be some specific things that I'm going to encourage you guys to consider including in your tax strategy, you know, to minimize what those federal taxes are doing to you. The things I'm going to cover, I'm going to talk about what tax liability is in general, just some background explaining why we even have this in the first place. We're going to talk about deductions, and then we're going to talk about setting up a system to account for and properly maximize your tax deductions. And then I have some closing thoughts to help all of you in general. If any of you have a comment or things you guys have, just please feel free to jump in. I've got a number of people on here. I know Eric kind of left it open for us to wait till the end, but sometimes I think I can give quick answers to some of this stuff to help. So what's a tax liability? I just took this straight out of an explanation just to kind of get clarity. Tax liability is the payment owed by individuals, businesses, or other entities to a federal, state, or local tax authority. Generally, you have tax liability when you earn income and generate profits by selling an investment or other asset. So there's some general ways to think about what tax liability is, but that's what we're focused on, minimizing what that impact is on you. And IRS will not calculate it. I think some of us have a misnomer that we can just dump all the information on them and then they'll tell us what they owe us. They're not interested. They're basically the rebound guys, right? They'll just tell you what you did wrong. That's really what their focus is. And they'll send you those nice letters to say what kind of adjustments that you need to make going forward because you calculated this wrong and you get to go fight them. And I have had situations with the IRS on several. I've owned several companies, and I've had them reach out to me for different things. I buy different properties. I own different businesses, and you know they have a way of doing things. And you know, and sometimes they just need additional information and clarity. It's just a big hassle, but it's part of the racket of the IRS. Reminds me when a buyer agent calls and asks, what will the seller take, right? So that's that analogy, like, what are they going to take? And you're like, give me something that I can work with. I don't want to work in the dark. I don't need to negotiate against my seller. So give me an offer, and then we'll give you some type of appropriate counteroffer based on what was made. So that's a little bit like the IRS. They just give you, a counter to whatever you come up with if they feel like it's not right. So we're going to start with deductions. I think the number one for all of us is we all have vehicles. Most of us are driving. And there's really two main areas. Most of this is going to be in bigger font. This particular, I try to drill it down to a point that stayed consistent with the presentation. It's a little small, but the underlining principle is you drive more than 10,000 miles per year for real estate business, you need to consider taking the standard mileage deduction. That's as of halfway through last year, it was 58.5 cents. And then at July 1st to the end of the year, it moved up to 62.5 cents. And that's because the gas prices went up so high over the summer. So you would just basically take all your mileage that you have accounted for, and then multiply it times 58.5 cents for first half of the year, and then 62.5 the last half of the year. And then it's just a flat item standard mileage deduction. Very clean, very easy. Most of the time, this is the simpler way to do it. It comes out ahead. If you're like me, I don't generally show a lot of houses. I have a lot of repeat clients. I'm at my office 90% of the time, Monday through Friday. And I'm a low miles driver. I would want to do the itemized deduction option. That's where you're adding up all your gas receipts, your depreciation on the vehicle, any fees, insurance, lease payments. This is also, if you have a real big monthly payment on your car, you drive the fancy luxury realtor car, some of you I know drive, it would really be advantageous to look at doing the itemized deduction. And then we're going to look at the payments on your car. That can really be a big benefit on getting tax deductions on the cars. Oil, tires, washes, registrations, very important. And this is something that you would want to coach your agents is talking to them about having some type of mileage tracking system. If you haven't seen it, they have apps that basically start and stop when you're doing it. And when you're done with the trip, you can put in the client's name, right? Keep it real simple. It already tracks date, it tracks start, stop, it tracks all that for you. And then you just put client name, and then it'll give you a report at the end of the year. That's one clever way. Either way you do it, you really need to kind of be tracking the miles that you do put on. This is by and far one of the bigger deductions that I've seen. So I usually kind of start with the vehicles. Any questions on vehicle deductions that you would make with the IRS? All right, go on the next one. Next one's marketing and advertising. This is a big bulk of what we do. A lot of you pay for a lot of printed material, business cards, flyers, signs, ads, promotional products, any of these type of things. I would definitely keep account of and receipts for, because they're all straight item deductions right off of the taxable income. Any online marketing, promotional costs, Facebook ads. A lot of you have done those property boosts through KV Core. I'm set to do a team one where I do property boosts consistently. So every time I get that monthly expense, I just throw it in my folder, and then I take all of that to my accountant. I have a accountant that takes care of all of this. And then she just puts it all and then puts it as promotional marketing materials, and then it accounts. Websites, all of you pay your $85 a month EXP. They give you KV Core. They set up and operate your URL for your website. Another easy expense you can include production costs, writing design fees. I come up with logos and stuff like that for companies that I create. All those type of things are easy marketing promotional costs that you can include. Anytime you purchase leads, right? That's an additional expense. That's one benefit on purchasing leads. At least we can write off the expense and the cost of doing it. All those expenses count directly against your income as well. Is there any marketing and advertising that I did not include here that you guys, any of you use or promote or do? I can see my chat anymore, but
Sherry did ask if you had a app, the name of the app for Lead Source.
Is a subscription?
Sorry, the app for the mileage.
Oh, good. You guys are posting some of these options. The chat wasn't showing up on mine. I've looked up mileage apps. It's been a few years ago. I just don't drive, so I never got into it. But I'm telling you, if anyone wants to post one they use, post it in here. There's numerous mileage apps out there that have been real effective at tracking it, and it's real easy. And they'll produce reports and all that stuff for you. I even think if you have QuickBooks, I think it even has a feature in there that you can attach to mileage. That's an easy option. And the MLS fees, yes, any of those type of fees for sure. We're going to actually get into some of that. Paul, you want to talk briefly about MileIQ?
Yeah, MileIQ is actually I think Microsoft bought them, but yeah, it's a phone app. It uses your location services. Anytime you hop in your car and you take off, as soon as you go to your next destination, it'll pop up, says MileIQ has tracked your drive. Is this business or personal? And when you click on the say business, you can have an array, client meeting, home showing, you name it, you can categorize that. And then if you have travel to the office or whatever the case, after time, it'll say, look, this is a repeat travel. You want to just auto log it. And so it'll start auto logging. So if you've got errands that you run to go to Home Depot, or not Home Depot, Office Depot, whatever the case may be, it will automatically start loading that up. And then you can print out monthly reports, yearly reports. I send the yearly reports to my accountant, and it's perfect. You can get it in CSV format or PDF. He doesn't care. So, I mean, yeah, it just automatically runs in the background of your phone.
And then Angela, what's Everlance? You there, Angela? All right. How about Charles? You talked about QuickBooks app. I know that QuickBooks does have an app. How does that work?
It's pretty simple. You're able to put your type of vehicle in there, and yeah, it kind of like the MileIQ one. It just tracks it, and then you can log it as a personal trip or a business trip, put a little note as to why, and then your frequent stops as well. So if you've got an office, to your home or wherever, if you're going out to a builder's office all the time, you can track those. Plus it offers receipt tracking and everything else.
I like it. I use I'll tell you what a thing I like about QuickBooks. I take pictures of all my receipts. Actually, I pay my son, who's 8, to take pictures. I style up all my receipts and he takes pictures of all of them for me. And then it just loads it right into QuickBooks. And then Ginny, my accountant, she just goes right through all of it real fast and then assigns it to the proper people and however she expenses it. So it's a pretty clean, easy way to do it. I love QuickBooks for a lot of these things. It's probably more expensive than most people want to spend, but the ability to track everything in one place and maximize your deductions is absolutely worth the cost of the subscription to QuickBooks. For sure, for me, it is.
There's another good way of simplifying your tracking is I have a business account, of course, but I run literally everything through my American Express Gold Card because it categorizes everything. And for my accountant, all they do is they just pull up my Amex and then balance that against my business account. It's 2 steps. It's nothing.
You use QuickBooks as well? So you take your American Express and it connects with QuickBooks and then it can account for it all together, or you do it?
No, I don't even use QuickBooks. I just send everything to my accountant. I've got a company called Formations. They're out of Kirkland, Washington, and they've tapped into all of my accounts, my checking accounts, my credit cards, and everything. They do all the accounting software bit. I could never do QuickBooks. I just couldn't wrap my head around it.
I like it. They've gotten simple for sure. As far as it's not even, it's hard because it's not like real accounting anymore. They just kind of simplify it to the lowest common denominator, which I like for everything. I don't need to be an accountant, but it's clever to be able to simplify things that easy. Okay. Next one is another big one. And a lot of you don't think about is your home office deduction. You know that in your house, you can take the percentage of square footage your office occupies, and then determine, I use an example of an 11 by 11 room in your house, and your house is, let's say, 2,000 square foot, then you've got 6% of the entire square footage can be used and applied as a home office deduction towards utilities, interest paid, taxes paid on your mortgage. So that's something that's another big one. I normally get, I don't know, I have $5,000-6,000 additional expenses that I get to write off against my taxes. Home office deduction. Guys, anybody have questions on how to do that, or any of you also do a home office deduction? Right, I like
This
it.
is Sherry again. Yes, I do a home office deduction. My accountant does, like, by the square foot, and there's a calculation that he uses for it. And then I think that would include like your utilities, but I think he does add internet and definitely my cell phone bill.
Yep, I have separated internet, cell phones, and stuff like that on another one, but it's absolutely home office internet. I tell you, any type, and I'll get into this, any electronic, anything I buy for any of my kids, I can apply them to my office, costs and expenses as far as my deduction and stuff like that. So that's actually the next one. Office supplies, right? So I buy paper, I buy boxes of paper still, even though we're in the modern age, my kids still use paper. My wife's a teacher, she still uses paper. Those are easy examples of things that we buy as a part of just our daily life, right? So we got pens, paper clips, binder clips, all these kind of things that we're buying. Just track all the receipts. Anytime you go to Office Depot, there's generally almost anything you buy in those type of places are pretty commonly used as a deduction for office supplies. When I buy phones, it's the same thing. I need the phone for my business, cases, anything I buy, cords, cables, anything to charge it, nightstand to charge it. All those type of things are things that we don't always think about, but any type of electronic device, you can make a pretty good case that would qualify you for some type of business expense that you could use as a deduction. I did say phone service. They talk about percentages. So I have a home plan. I have a family plan. And so I'm going to take whatever percentage is mine. I get to apply that part against my deductions. I know we talked about QuickBooks before. The software, the cost of the software, specifically what I'm talking about here. In any type of software that you use for your business, if you use anything beyond KV Core, that's additional CRM tracking type systems to keep up with clients, any type of apps, any type of ongoing, well, I'll talk about that next. Any of those type of things are easy ones to make sure you include as part of deductions as well.
How about a Microsoft 365 subscription? That's what, $100 a year. That's deductible, correct?
Oh, I for sure deduct that because I use that specifically for all. I had to buy it. I've been putting off Office 365 for a long time. I don't know if any of you know what Rackspace is, but it's basically my email company that I use as my hosting service, and they got hacked back in December 1st, somewhere around there, and they lost everything, all of my history, all of my emails, everything. And I've had this email since 2008 when I started.
I was going to say Rackspace has been around forever.
So they used to be one of the names in emails for small businesses, right? Because they were cheap. They did what you needed them to do. They were easy to kind of interact with and get what you want done. One of my network guys, they set me up on Rackspace, and then they had a security breach in December of last year, and we lost everything. I mean, it was very frustrating. I was 2 weeks without having any email. Okay. And I'm not a business that I run around showing houses and stuff. I do everything through email. So it was very crippling, for me. And anyway, long story short, they offered a free membership to Office 365. So I made the move over to it, and I'm using the Outlook and all that. But the subscription for Office 365 is definitely a business expense. I would definitely write off any of those type of things that you use, any software you use for your business. I mean, I use Word, I use Excel, I use all those things. And you don't have to have Office 365. I think Google generally offers their suite offers enough reason that you don't need to pay for a subscription. I just had to do something for my email that was going to secure it. So that's why I made the move over to it. Yeah, it's not expensive. It's like $100 a year. Any other software things that you guys do that I may be missing?
One of the things to consider is, and again, everyone should be using, I'm guessing, an accountant of some sort. Definitely ask this question of them. If you're looking at a percentage of something because you have it for the home, but you use it for the office, sometimes it's a straight percentage based on square footage. Sometimes you need it for your office or your work, but you can use it for your home. If the lion's share is the inception of the cost and then there's add-ons, you can write off the majority of it because you need it for one thing, but you're using it for others. So that's the only thing when it comes to percentages that you might want to keep an eye on.
Yeah, the main point on this area here is that there's a lot of things that may be not intended for business initially, but certainly can fall into the business category. And I keep receipts for all these type of things, and I just snap it, put it in QuickBooks, and it tracks all of it. Real easy. Meals and entertainment's another big chunk for a lot of us. I know some of you are talking about training and coaching and doing some of this other stuff. So this one's a little bit trickier to kind of understand and wrap your head around, especially if you're going to travel and do these things. So let me kind of walk through this. And this I learned way back when I was working in the accounting department, but I was handling all of the human resources. And we looked at a lot of ways to try to help meals and entertainment for people that were sales staff and how to properly account for and offer proper deductions with it. So that's why I kind of learned a little bit more about the way that they would interpret this. When traveling on business, when you are dining with clients or with other professionals for the purpose of conducting business, that's a situation that you could qualify as a deducting business expense. If you're trying to generate referral business, that's another reason we need to look at creating an opportunity to deduct that expense as well. In any case, you can deduct 50% of your total expense is one way that the IRS uses an easy example. Instead of trying to itemize or get real specific, they allow you just to do that. In the case of business entertainment, you're allowed to take the meal deduction only if business was discussed during the meal or immediately before or after. I'm guilty. I think I often go out to eat with friends, and I'm generally talking about real estate. So it's a pretty easy thing for me. Or they ask me advice, whatever it is, I'm generally always talking. So it makes it pretty easy for me to generally write off anytime that I go out. But that's one of the qualifiers. So, and there's specific things on a receipt they're going to want to see. The IRS, I took that straight from the IRS. They want to identify the payee, who the store or the restaurant, the amount, the proof of payment, how was it paid, cash or credit card, and then the date it was incurred. And then a description of the item to show that the amount was for purchases. So in this section, I would also, you can identify a client, right? So if I have someone associated with that I'm talking real estate with, you would just identify the client. So the only thing you need on a receipt is really a client name, because everything else should be on there. The proof of payment, identifying the payee, the amount paid, date incurred, all that is on a receipt. All I would add is just the name of the client that you had a conversation with. And as long as it falls within the window of the tax year, then take the receipt and then take a picture and then upload it into your software. And they have other receipt picture software options out there. I just use the one that was built in with QuickBooks, so you guys, there's other ways you can keep track of this instead of manually doing it. In the case of events that are provided to the general public, such as well-advertised open houses, you can deduct 100% of the cost of refreshments and food. When I was doing my open house training I did a few months back, I talked about having some really big open houses. And one of the ways you can do that is properly setting it up with drinks and then packaged items that people can pick and take with them. Generally don't bake fresh baked goods because people don't want to touch others' food. So that's another way you can do it. I know some of you made some comments on meals and entertainment. Did y'all have any other thoughts or things on that? I think someone wrote about coaching. If you are doing coaching or you're getting coaching or you're going to an event for training purposes, absolutely critical to make sure you include the cost of the travel and the cost going there. It's actually on the next page. We talk about professional development. That's really a good one. All of you do some type of training. Obviously, you pay for any type of online CE. The bill there is pretty straightforward. But it's when you do the traveling for, and it could be our attraction conferences as well. I know Eric and the team, we put on attraction conferences. Those are opportunities that you can write off as well. Any other thoughts on meals and entertainment? All right, last couple of deductions. Obviously, and I saw one of you put membership dues. All those things are professional cost to keep your license. Those are requirements for you to keep your license and to do your business. You cannot do business without having a lot of these licenses and things in place and things you have to renew them. So license renewals, professional memberships, above and beyond your local, national, and state. You could be a member of other professional membership organizations that are associated with your business. For example, if I'm in a luxury group, professional group, and I do referrals or part of that group, I'm able to close additional luxury deals. That's absolutely something that you would want to write off as a deduction because it's part of your business. MLS dues, the cost of having your MLS. It's hard to list a house, right, without the MLS. So that's a real critical component of our business. For those of you that travel and go to different places, the conference, that EXP provides twice a year. That's an easy one, right? The cost of the conference, the cost of the hotel, the cost of travel, all those things are necessary for you to be a part of those conferences and, and continue to grow your EXP business. Those are easy ones to also include.
What about meals and everything else during the conferences? Are those all,
so
write that out?
They have per diem is what companies used to offer individual agents is how they would set it up. They may call it $150 a day. They may have different ways that businesses would do it. I think if that's where a business was paying for you, if you as an individual sole proprietor are in a conference and you have meals and things like that, I don't remember the specifics, but I know you can write off some part of, if not all, while you are on that trip. So
when you're traveling, when there's a specific amount when you're traveling, that number does vary year to year. So again, one of these things you can find out online or through your tax professional. But I agree with Shaune. If your company's, it's one thing, but if you're doing it on your own and you're traveling away from home ever, there is a tax benefit for being away from your home when you're doing business. So you might want to check online or again with your accountant to do that.
That's why Eric travels all the time, so he can get tax benefits to eat food. It's a good idea, Eric. All right. Anything else on travel, accommodations, attending training, write-offs for making these trips? So it's just another incentive for you to do it because that bulk cost of going is another deduction you can include in your taxes or tax deductions. Am I missing anything? I think I covered all the most important deductions that are available to us, especially as a real estate agent. Is there anything that you guys could think of that I left off and I may include in my trainings in the future?
I think you get most of it pretty well, Shaune. It's funny, I'm looking up at my buddy Dave Weigel. Dave knows this tax structure situation better than most with his background as an attorney as well. Dave, is there anything you think Shaune missed or something that others generally speak about?
Not really. I do think that a lot of people like to buy EXP branded clothes. Like that might be something that could be deducted as well as an advertising thing. And then also I mentioned photo and video equipment because we're all out there, right?
You bring up a good point. Video equipment, some of the costs involved. Realize every ancillary, everything done around marketing can be a deduction. You just have to figure out if there's a limit You have to figure out if you're using it at all personally. And generally, it's like I said earlier, if you use your brain and you just follow what you think is the right thing to do, and now Google everything, if you don't have a tax professional, you'll find out the answer. But Dave, that's a great point. Branded information is marketing. And although, yes, you need to wear a shirt other than if you're in Green Bay in the winter at a football game, then if it says something on there that's promoting your business or promoting your career in any way, it can be deductible. Anybody have any questions? First of all, thank you, Shaune, very much.
I have a few more, just a couple more slides that close it up, but I just,
go ahead.
I did take that cost to list, right? I mean, I didn't even think about the hard cost of actually listing a property. I mean, like, I didn't include that in my presentation, but the photos, you're paying for photos, not just getting a camera, but you actually having to pay for the photos, all those obvious expenses going into. And then I have a couple of VAs myself, and that cost of me paying them to do business back office type of things, those are easy costs. So you also want to make sure you include any of those type of labors. Promotional, I do have promotional products, but that would include shirts, which I have a number of them, and things like that. Those are additional perks of being able to buy. You know, I used to buy these polos and put my True West Realty logo on. I got a bunch of them. Those are easy expenses and stuff to also include. Those are good thoughts. Last thing I was going to cover is really ongoing future. Like, what are we going to do with all this information? There's really about 7 or 8 different categories of deductions. And, you know, you as a sole proprietor should be able to check off and take care of. Beyond that, we've got to have ways of tracking it and things like that. I use QuickBooks. It works for me. I think there are much more simple accounting type options out there. You know, so I just wanted to kind of cover that, make sure you have some of those type of things really help, especially when you grow to a point where you have a payroll, right? So yeah, I know, Bob, I'm not sharing anymore. All I've got left is a few things I was going to talk about. Plan on paying 1099 taxes quarterly. That's another thing, right? So we have the cost of, when we have all these incomes coming in, so we've got like $10,000 made in the first quarter, we're supposed to, the IRS requests that we make payments quarterly based on income, and you have kind of a projection. And you may say, well, I'm on pace to make $60,000, so I'll probably have, you know, $15,000 of taxes. So let me start paying $7,000 or $8,000 every quarter, right? So you need to keep up and track that. That's, again, something you're going to have a conversation with your CPA, but there is a way that you can go on and make payments to the IRS quarterly to stay ahead of it. They do have a problem when you go all year and don't pay them anything. Then they start coming back and you start getting penalized for, hey, you're holding my money, the IRS, all year. There's going to be some type of a penalty associated with that. And you can guess, you know, obviously most of us want to guess low because we don't want to overpay, but at least have something going in there quarterly. Consider, you know, really income versus expenses. And I want you to think about, you know, I know most of you, at least at some point, have worked with a sole proprietor client who says they make $300,000 a year. Okay, great. Let's go look at houses. And while you're getting pre-qualified, and then you come to find out they write off $300,000 a year, which means they make no money, right? Even though they do. So that's one of the things you got to think about. If you write everything off, it makes it real hard to qualify for any type of loan going forward. You can't buy cars, you can't buy houses if you can't prove that you have any type of real net income. So, you know, it's nice that you can have zero taxable liability, but the reality is no one's going to give you a loan because it means you don't make any money. So find a balance there of properly accounting for and doing deductions, and still have enough income that you can still qualify to operate and buy things out of. If you don't have anyone, I use H&R Block for one of my businesses. It's super simple. In fact, they don't even get into my QuickBooks. I print my P&Ls and my balance sheets, and they build my taxes off of that, which means they probably limit their liability considerably. But the cost to do that is like a couple of $100. You know, my CPA that does my primary business, I think my first year was like $13,000, right? But they saved me like $20,000 in taxes. So it was worth it. It was an investment to me. And then going forward, I pay them every year to manage and take care of my taxes, and they do tax planning beyond just, tax savings and beyond reactive, right? If you get to a point and you're really getting effective and you're making more than $300,000 a year in income, I would suggest you really look at the tax planning, which is a proactive strategy versus just reacting every year to how much can I save now. So real important to think about. And they have lots of clever things like, putting your spouse on the payroll, putting your children on the payroll, because there's things you can put your children on the payroll and still legitimately qualify them, especially if you have them doing some of these cute open house videos and you post them on Facebook, them showing the house, all these fun kind of stuff. Those qualify as employee related type options that you can effectively pay them and get that full amount of benefit and tax savings. So that's another real big, clever thing you can do. Health insurance, these are some of the ancillary things. I pay for health insurance, a self-directed IRA, Robinhood, solo 401k plans. There are new options available to us as sole proprietors that we can invest in our own retirement plan above and beyond what we're doing here with RevShare and in the stock that we collect here. So those are some more advanced things that I learned about when I got into the tax planning part. All right, let's go through any questions right here, and I'll kind of go through and look at some of the questions that we have.
I guess one about the age of your children. Is there a rule of thumb that you need to adhere to? I mean, with underage employment. I mean, I have no idea.
Yeah, no, there is, right? So they have a scope and a limitation. I can't have a payroll for my 2-year-old, but there is the minimum is 7 or 8. It's young, okay?
Wow.
But it's not for them to go out and go work in the field, right? I mean, this isn't back in the day. It's for them to have some type of if I put them on a marketing campaign and we did open houses and I did an hour video, that I post, or a 30-minute video, whatever, and they do some goofy stuff, selling a house or something, I can associate that as payment for their services and marketing. Again, this is going to get into a lot of interpretation and gray area. I'm not a CPA, but I know that there's ways to qualify them for that. And it's not just, they're less than 15. I have child labor laws I'm dealing with. This isn't manual labor. This is, I'm using their likeness, and it's creating marketing benefit to my company. By using their likeness, I can gain income, and by gaining income, I can now write off their expense. You kind of have to follow the program.
Sounds good.
Yeah, it's kind of high level. I can't get real specific on I've not moved into employing my kids yet, but I do have agents on my team that have, and they've been able to write off those periods of time. How much did you pay yourself or your spouse as a 1099? There is an answer to that gives you maximum benefit. And again, I hate to defer everything to a CPA, but there is a point that you can pay your spouse on payroll a high enough number that you get maximum benefit. So I would look into that. You can call her your chief marketing officer, or him, your whatever you want to do, partner, business partner, whatever. I mean, you got to establish some type of role for them, but they can get paid, and it can come off of your excess income that you have as a tax deduction. Nikki says sponsorships. You there, Nikki? I missed her. I don't know what she means by sponsorships. Joyce, you asked about how far away from home is away when you're talking about business trips and things like that. There is, IRS does specify that. They tell you how far you got to go. Eric, you travel a lot. Is that something you can kind of give a gist of what the...
No, I don't. Again, I don't have an exact number, and those are the kind of numbers that often change. So you may want to check with, again, Google has everything, but I do want to address, you talked about sponsorships. I'm not sure this is what they're talking about, but if you, again, are marketing yourself for any reason, spending time and sometimes money and sometimes time, definitely money, it is in most cases, deductible.
So like Little League or something like that, right?
If your name goes on the back, or you go for a day and you give them refreshments, you buy everybody pizza, that is a deduction. even though you're just buying it, I mean, legitimately buying it for your kid's baseball team, as long as you're giving your card out in essence to all of the parents, there's a way to make that work. Again, let me say this, because this is a tax talk, but it's not a professional tax talk. Because again, we're telling you, check with a professional. I love when Kelly smiles when I say things like this, because you definitely need to do that. What I will say is, in most cases, there's guidelines. And generally, the IRS is looking for people that are grossly misrepresenting what they're doing. Two ways they look at that. All of a sudden, something big that they didn't see the year before. And secondly, if you're trending some way and all of a sudden there's a weird spike in your own trend, these are indicators for the IRS to generally look. Again, I'm not telling you what to do or what not to do. What I am telling you is, if you're doing usual and customary, they're not generally looking for you. So do a little bit of research. It's funny, this is not the topic people want to talk about necessarily, but do you realize that this topic, if you can get your hands around just the basics of it, will probably save you more money than you can imagine over the course of your lifetime if you gain incremental information. And for some of you, let's use this year as your baseline starting point.
All right, we've got a couple of comments in there. Romy was asking about, my husband drives me out of town and goes with me to show houses for my protection. Can I pay him and deduct this pay? Fantastic. He sounds like a security guard and your limo driver. I mean, that's fantastic. That sounds like employment to me, but again, I'm not the CPA to account for it. I would absolutely put that in front of them. And that's probably going to be a good qualified option. If you have enough income, you need to write off on as a deduction. You can add that type of salary option in there. I think that's a fantastic idea. And then Kelly and Joyce asked about the same thing. When you have bundled services, which a lot of us have those bundled internet, phone, Verizon or AT&T both offer these type of options. The way I would think of it, and again, add up take your entire bill, go to your CPA. But I would say it's probably a percentage of your home office that you use, because even your utilities, I didn't even talk about that. Water, electricity, and gas, those type of things I need for my business when I'm working at home. So I take my 10% or whatever I think I end up with like 12% of my space in my house that I use for office purposes. I would write that off against those specific things. That's the way that I do it. Again, ask your CPA. The easiest way is take your entire bill, give it to them and say, hey, how much of this can I write off? And they're going to come back with something probably pretty similar with what I've just shared. Last thing is, and I wanted to talk about, some of you have moved beyond that. You're moving into LLCs, and you probably have accountants and people that do things on your behalf. Look at really running a payroll. My advice to most of my agents and my team is we need to have an ongoing system of how to properly account for your income, that you can build something that's sustainable. Meaning, if most of us ride the roller coaster of real estate, we're broke for 3 months and we're doing great maybe the other 8 or 9 months, whatever. That's not a great way to live. So my encouragement is to find a way to pay an ongoing payroll to yourself. And it can be distribution heavy, another thing for your CPA to explain to you. But by distributions, you're able to take money from the company and you pay 0 tax on, as long as you have a proper income, taxable income as a payroll that's commensurate with what your role is in your company. So if your role is owner of the company of a small office, and we can say 30,000 a year, right? I'm making up a number, but something that the IRS is not going to flag, then make sure you pay yourself enough to cover that amount. And then you can do distributions above and beyond that. So maybe I pay myself $3,000 a month for my salary. I take my taxes out, and then I pay myself another $3,000 a month distribution, which is my equity position in the company that I've gained. Now I can pull out distributions with no taxes. So there's ways that 50% of my take-home money has no tax on it. Not to mention, there's a payroll benefit of running payroll. There's tax benefits as well. And that's when you set up LLCs or even an S Corp. Not going to go into that on this one, but these are the directions we want to go when you go beyond a sole proprietor. And the thing is, the way I like to make things where people can understand, let's say I make $100,000 and I'm a sole proprietor, I might pay $30,000 in taxes. But if I move that same company over to an LLC, I may only pay $20,000 in taxes, right? That's a simple way to think about it. There are ways to get there. That $10,000 savings does not cost you near that much to get that savings. That's why this topic is important, to understand how taxes can impact your business.
And echo to that real quick, Shaune. If you are operating and you're in business, any type of business, especially a realtor, and you have income coming in and you have not had a conversation with a tax professional about whether you should do it through an LLC or an S Corp versus doing it as a sole proprietor. Again, depending on the state, whether it's an S Corp or an LLC, and that'll matter. But the difference between a sole proprietor and one of those two is huge. You should know the difference. Shaune, you were saying?
That's actually all I have today. I hope that was beneficial.
Right on the perfect time.
Yeah.
I do want to, first of all, say thank you very much for that. He won't close right away. If there's another question that pops up, he'll answer. But I want everybody to know that we appreciate you showing up here. We do. We know the content was valuable for you. Don't miss, if you like Shaune's content, hit his YouTube channel, subscribe, do whatever. That's what we do in today's world in social media. But he's got some really good stuff on there, real estate wise as well. If we can help if any of us can help any of you for any reason, reach out to us. You've got our names. Most of you know how to contact us. And again, don't forget, every Tuesday we do something related to more transactions. You don't want to miss it next week. It's always the exact same link, just so you know. Shaune, anything else?
No, I was just gonna pull up my channel. Yeah, I'll do that just real quick. Okay. Exit, share screen. This last thing I have, I do a lot of trainings and things like that to help people. My main thing is I want to look at building everyone's business, right? I'm real big into sharing and doing a lot of training. I do tips for buyers and sellers. I interview with a lot of pretty successful people in their relevant field. There's a couple of attorneys I interviewed. We just had an NFL player that just joined the mortgage company. He's done really well. This Trey Caldwell. I've been doing these trainings and these podcasts where I just kind of talk and interact. A lot of it's just off the cusp, and we're talking about social events and stuff like that. But other things are specifically value add for people that are doing just selling real estate. I even put all of my True West meetings on there as well. So if any of that's of value to you guys, you need help growing your business, feel free to reach out to me or jump on my YouTube channel. I have a lot more content I'm going to be putting out there and creating. And my main thing is to help people grow their business at little to no cost, right? That's either through lead generation or joining teams yourself and learning how to leverage those relationships. That's a big part of how I think we can all grow. So that's the last thing I have. And then I've got to jump on my training that starts at 11 o'clock on Tuesdays as well. I appreciate all of you.
Shaune, I want to echo again, thank you for joining us. I want everybody to know he did an absolute killer job almost a year ago today. I think it was January 12th last year, and it is recorded at freedomteamsupport.com on open houses. It's something you don't want to miss. So with that said, thank everybody for being here. Let's make it an unbelievable February. It's right around the corner.